All right, everyone, welcome back. We're going to be going over another chart breakdown. So first things first, mark out your Asia session. Once your Asia session is marked up, we look for anything after that. We do not trade Asia session. It's not part of our rules. So anything after that is when we start to look for trades. All right. So once we have that marked out, we need to understand, okay, where can price come into? So Frank is about to open. Frankfurt is about to open, right? We have the low, Asia low, right here sitting. It hasn't been taken yet. Okay, it's the 15-minute time frame. But we need to understand what's going on overall in the big picture. So let's go to our higher time frame. Let's go to the 4 hour real quick. See what we see here. So you can see we took out a previous low. There is sell stops resting below this low, and there is buy stops resting above this high. And the market moves from sell stops to buy stops. So if we are going to take out all the stops from this low, price needs to come to an area to pause. It's going to come, it's going to pause, and it's going to give us some type of reaction. It's going to reverse, right? Because if it keeps on going, then everyone that went short here is going to make money. And the market doesn't want you to make money. So it's going to take them out, and it's going to make a reversal. So what's the closest POI to this low? Because remember, every external range is a inducement. Every external range has liquidity above or below it. Okay, so we use the external range as an inducement point. So that's the external range because price fulfilled its overall target from this area here. Change that. Right, it filled the overall target from this high to this low. That cycle was complete. So after we took our external, our next move is to come for internal. That's the range cycle, which is from internal to external, external to internal. So the closest POI to this low, which not to mention is the lowest out of all of these, is this imbalance fill price action right there. We're not going to choose this one. That's too far away. It doesn't make no sense. Okay. It doesn't make no sense for institutions to push that low. If they don't want you to make money, if they push this low 4-hour candles, that's 4, 8, almost 12 hours of data. So the closest thing to this low is this imbalance right there. All right. Now we use the higher time frames, okay, for simply to get a reaction from the area. So we know we're gonna expect a reaction. That's a 4-hour POI. So we can anticipate some type of reaction from the area. Now, this is the POI, okay? But remember, inside of a POI, there is a QM. There's a strong high or a strong low. If we drop down to the 15-minute and we go over here, you're going to see that all of this is simply a strong low. You see that? So all of this is your point of interest. Okay? So price can come down into this area, but this is your buy zone. So it can do all of this, come down lower if it wanted to, and then go long. You're still in this buy zone in this area because this is your strong low. As long as this low is being held, we're still bullish for the day. If it breaks, then it just invalidates the entire bias that we have in mind, right? So remember, a strong low should not be broken in this case. So that's that. Just a quick reminder on that. All right. So when price came into this point of interest, we know it took out a major low, an old low over here. And this is the point of interest here. So let's play this out. So we're gonna wait for London kill zone to take a trade. Cool. So now we took out the Asia low. So not only did we take out a major low, now we're taking out the Asia low. So because the market is fractal, we treat them the same way. After we took out all these sell stops, what do you think price is going to do? What do you think the institutions, the big players, are going to do? They're going to reverse price because they don't want people to make money. So we're going to get a reversal, right? And we know that we are in a 4-hour POI, as you can see here. 4-hour POI, Asia low. We just took out stops, so we can definitely anticipate a reversal from this area. So when price came into here, we're in a 15-minute time frame, and I know in order for me to confirm my QM, I'm gonna need this high to break, and that's in the 15-minute. If I wait this long, I'm not gonna catch no early entry in here. I'm gonna miss my entry because I'm waiting for this to break. So the most logical thing to do is drop down to the 5-minute and the 1-minute, which is our lower time frames. So we drop it down to the 5, then down to the 1, we can see more data. So now, because the market is fractal, we treat the higher time frame the same way that we treat the lower time frame. We treat the lower time frame the same way that we treat the higher time frame. If this was a O low, if this was a daily O low or a weekly O low, what will we look for in here after it sweeps those sell stops? If there was a daily or a weekly, we'll look for a 15-minute or a 1-hour QM. That's it. So it's no difference. Just because we're in a 1-minute, this doesn't make any difference. We're looking for the same thing still. All right. So when price came below this O low, now we're just waiting for price to give us that sign reversal, which is a QM. So no strong high has been broken yet. So we're still waiting for that. All right. So we have this high that took out this low, took a liquidity, and then we broke structure. So we're monitoring this high. London kill zone hasn't opened yet. So, all right, we broke structure. So we got the BOS. We're in the 1-minute, right? And the reason we should be confident on taking this trade is because we are in this 4-hour POI. In other words, this buy zone area. We just took out sell stops, as you can see, not only from a major low, but also from this current 15-minute structure point low, which is also issue low. So we took out all the sell stops. And we know that we can anticipate now a reversal to the upside. Right? And because the market is fractal, we treat them all the same way. So if price broke structure here, okay, so notice it broke a structure also in here in the second time frame, right? But anyways, that's the high, that's the low that we care about. It took out this low right here. Yeah, let's see if it respects this strong low, which is this one here. It shouldn't break this strong low. It did. Awesome. So this would have been your first long right here. We're taking that long. Our first target is going to be here. So now notice it took out this low, right? This is a fair swing. It didn't take that low out. Price broke. So your range was from here to here, right there. Okay. So price broke, took out the liquidity, came into that POI right there. So that would have been your first entry. You would have seen this better on the second time frame, but you don't want to go that low as you are already on the 4-hour POI. I would stick from the 5-minute, 15 5-minute, and 1-minute if you need to go down. But notice the reason I went down to the 5-minute and the 1-minute is because I know my 15-minute swing point is all the way up here. And if I want to get in this move during London, I need to look for a early entry. And that's what I call it, a early break of structure. I understand that's still my 15-minute swing point. But if I wait, I'm gonna have to wait until all this happens, and I'm gonna miss the move by then. All right. So that's why we're on the 5 and 1-minute. So everything needs to make sense. It has to make logical sense. Okay. So try this out. Now we have a full-on break of structure. All right. So now we have bullish intent. So now we're definitely going to the upside. So London hasn't opened yet. London kill zone. So let's play this out. Nothing yet. Okay. All right. So we just took out this high. So that high just got taken. This is going to definitely be a chart. So price broke structure, made a retracement, and broke structure once again. This will be for us T1. Okay, that's T1 right there. So we're gonna look for something below this. Now, we do not use anything less than a 2 pip stop loss. So 2 pips is what we're gonna use here. Right, we don't use anything less than 2 pip stop loss. So that's the low. You already confirmed a 3 confirmation, so that high is pretty much confirmed. Let's go to the 5-minute and see what's below that. All right, so we have this block, but this block right here, that's the body. Let's see. Draw a line. Lines up with this. So this right here took out this low. These are the candles that took out liquidity. So that's where my interest is at. The candle that took out liquidity and then we broke structure. So that's my POI right here. So I will look for a long in here. 2.6. Tapped in. So now, this is a 1 to 2, right? And if I know that I'm in a higher time frame POI and I can at least get a push all the way to this high up here, to this area here, because we're in a higher time frame POI, I'm anticipating price to at least take out this high here, which is 15-minute for a 1 to 11, right? I don't want to close everything right here on a 1 to 2. So after we break this structure point high, in other words, break a range, I'll go break even. And the reason I'm saying that I can anticipate price to go to at least as high is because we're coming from a 4-hour POI. So we can get a nice decent reaction to the upside. After we took out not only this low, but this major low over here. All right, so let's play this out. All right, so we go break even now. Currently a 1 to 5. Now, we know that we aim for a 1 to 5 minimum per day. That's all we aim for. 1 to 5 per day. That's it. You don't need more than that. That is, if you can do a 5% every single day, or not even every single day, but at least 2 times out of a week, that's 10% a week. All right, and that's more than enough. Okay, so we aim for a minimum of a 1 to 5 trade. If it's not a 1 to 5, then we're not gonna take it. Okay, a minimum of 1 to 5. Now I know I can anticipate price to give me at least a minimum of a 1 to 11. Currently now floating a 1 to 5. Okay, so I need to make the decision. If my daily target is a 1 to 5, am I happy with that 5%? Am I going to lock in my profit and be done? Or am I going to hold until I reach this level here? So if I know that my minimum target is a 1 to 5, not only that, we also just took out this high right here. Okay, then I can pay myself something. I can partial out. This is a personal thing. This would depend on your situation. Whether you got a prop firm, whether you got a small account that you're growing. I don't know what you're trying to do with your account. It's your money. It's not my money, it's your money. Okay. So depending what you want to do with your money, you can partial out or you can hold. Or you can take it all for a 1 to 5. All right, don't forget that 5% is still a lot of money. On a 100K account, we're looking at $5,000. So if you have this floated in front of your screen and it meets your daily target, which is a 5% minimum, then take it. All right. But if you don't want to, nothing wrong with that. You can hold on to here. Or if not, just take half of this or take partials. It's up to you. All right. It's up to you. It's your money. So I'm aiming for this high. Go to the 15-minute time frame. Right? I'm aiming for this high. It's the high, that's the low. All right. So that's the high, that's the low. We officially broke just now the first, let me see. Check the 15. High, low, high, low, low. Yeah, so we just officially broke the first swing point high. So now we can confirm a range to be from here purple to here. So now these, or this low right here is being shared with the external range and the internal range. All right, nice. So that's more raw target. So now let's look to scale in. Okay, so to the 5-minute. All right, so price is gonna give us a reaction from, where's reacting from? Took a liquidity candle. So this is an untested or unmitigated strong high. So price would definitely give us a reaction. Now, remember, we're in a 4-hour POI, so we're still anticipating longs, right? A bullish day, pretty much. Now, this is something you have to understand. Right? These untested QMs are going to be the reason price does that pullback. It's very important. It's going to be the reason why price creates that pullback. And that pullback, you can take advantage of taking the short and then the long. But now you have an understanding of where the pullback can occur. So you can enter on the pullback, right? And you can enter also on the untested QM. All right. So I'm anticipating a pullback on the untested strong high from here to the downside. All right, there's the retracement, there's a pullback. Okay. So let me just get this out the way for a bit. I'm still holding this. I'm still holding this. So now we have a run liquidity and a break instruction. Okay, so we can potentially get a short opportunity here. Let's see. It didn't take out anything. There's no inducement that took out. There's no liquidity. There's no obvious liquidity for me. Okay, so I'm not gonna take it. So if this goes, it goes. And the candle took out liquidity was this one. Let me check the 5. Yeah, it's a unmitigated wick on the 5-minute, which is simply a rejection block on the 1-minute. So if this high, yeah, so this never mitigated blocks, right? So it never came in to mitigate this area here. So the price breaks this low, then we can anticipate this to get taken. So here's the part where we gotta think now. This can become a pool liquidity, and we got also have equal highs here. So this will be the reason why price comes up, tests this, and then it goes down. Price brush structure made a retracement. Brush structure once again. What is gonna happen here? Think about it. Stop loss is all above here. Supply traders, SMC trader. This would be the SM smart money trap, SMT. That's the trap. Yep, price never came back up there. 5 minutes right here. Never made it that wick. There was no obvious liquidity just below it. There was nothing. Sure, maybe in the second time frame you could have taken a short here just to take out this low. So you could have taken it this, but let's say you took from here and then your exit would have regardless been right here. But I wouldn't take it. This looks way more convincing. So this would be T1. That would be T1. So price brush structure, maybe retracement brush structure once again. This become the trap. And I know that at least 80% of the time this happens. So this is a textbook setup. I'm gonna take it. My favorite type of setup. And I'm gonna target the low whenever it finishes forming. All right, beautiful. Beautiful. I mean, you think about it. It's just pure logic thinking. All right, think about it. How many people will go short here? A lot. We do the opposite. All right, price came back up again. Nothing wrong with that. But notice it never took out the strong high. It never took out the strong high. All right, it broke structure, made a retracement for another short, but I'm not going to enter there because I'm already in this trade. So there's no point to enter here again. Maybe if I missed it, I'll enter here. But it never took out that strong high. Hold it. Okay, we're going to take another short here after it took out this high. Two pips. Remember also, if you have the right leg, in other words, the right bias, every strong high will be protected. So if you're bearish, every strong high will be protected. If you're bullish, every strong low will be protected. So you can just stack trades until your target's fulfilled. All right. So then waiting for this. Target hit. So we just took one trade here for 1 to 3. I personally wouldn't take it as that is a 1 to 3, but it's just such a textbook setup. Just want to show you guys as I am breaking this down for you guys. 1 to 3, I wouldn't take it personally. It's just not worth the money. It's not worth the risk. This was a 1 to 3 also, just not worth the risk. So that's why I say not every single trade is worth taking. You're gonna get to a point where you can see trades everywhere. Once you get to the point, you know, to a level of just understanding this and seeing it as second nature, you will see trades everywhere, but not every trade is worth taking. If you're taking a 1 to 3, you're taking a retail setup. So it doesn't make no sense personally. So I will aim for anything that is above a 1 to 5. 1 to 5 minimum, but nothing below. This is also a 1 to 3. Yes, it's a scaling trade from 1 to 3, but it's just not worth my capital. That's personally me. For you, maybe different. All right. But I'm showing you guys how to cash these trades. So now we took out this low. So let's go to the intraday time frames. Price is gonna come into somewhere. So what is this? This is the one that took liquidity. This is imbalance for price action. I don't want to go to the 1 hour because it's gonna show the move. And I don't want to show the move. This auto block took liquidity. So I already know my POI. It was quite obvious actually. This one lines up with the 15-minute, I believe. Yes, it's inside of just 15-minute imbalance thing right here. Yeah. Let me see. Remove this out of the way. That's the imbalance. That's a start. It's the end. The imbalance to closing to this. So we're going to put in the imbalance open. It'll be like this. All right. When you're back testing, don't lie to yourself. Be honest. Be honest. All right. Don't lie to yourself. So that's the one I would take. Another close PI to liquidity as the imbalance, which lines up with a breaker. Yeah, that's it. That's what I would take. So that's my POI. I'm expecting price to come into here. So I'm gonna exit here. So now look, price is now giving these institutions a reason to go down and now giving a reason to go up. Notice how liquidity is being built up. All right. Right, perfect. So this is like a 5-minute POI. Let's drop down to 1 minute. It's a breaker. It's a nice breaker. So 2 ways we could have taken this. The first way would have been a direct entry with a stop loss just below the breaker, which would have been around a 3.5. just like that. And the other way will be for confirmation entry. All right. But for the example, let's say we took it directly. That'd be a target. Notice how it lines up with the breaker. There's a breaker this high, took out this low. So that's the breaker block. Lining up with the higher time frame POI. So we have the 15-minute, I think 15-minute imbalance fill. Yep, 15-minute imbalance, then a 5-minute breaker, which lines up with a 1-minute breaker. So everything lines up. So yeah, I'll definitely take this directly. So just for the example of this, that's how you would take in this. Let's see if we can catch a direct entry. I mean a confirmation entry. Let's see. All right, so we broke structure. I know we did on the second time frame, but I can't go there right now. Let me just remove that. So we could take another long right here. Let's see. Let's do a 2.5. Okay. So that would have been a loss. This would have been a loss, 100% a loss for me. So it would have been a loss if we took it directly, and it would have been a loss if we took it on a confirmation entry. Now, again, I was just anticipating that there was a break structure on a second time frame. That was just me, right? So nothing yet. So then we took this low. So we took the loss there. It's fine. It's okay. Don't freak out. All right. But this is still a valid POI because the strong low has not been broken. So we're still in this buy zone area. It's cool. So this is what we have here. Now we have a clear BOS, have the inducement, broke structure. So BOS, tracement, BOS again, this would be T1. This is textbook, 100% this is gonna go now. So I'm gonna just enter, let's check the 5-minute. Right here on the candlestick liquidity. I'm gonna target this. So now we should just go. If this is the last, yeah, the last flow that should be created, following order flow, mitigating, follow the money, this should be the last low. All right. I want you guys to notice that I'm not trying to be perfect here because the market's not perfect. Like, we're taking trades that meet our rules and everything that you guys have learned. So this is T1. So liquidity, block structure, and then we had a major break too, so that's even better. But BOS retraced, BOS again, that's the inducement. Then the POI right here, which was the 5-minute. Stop loss is below. We can do like a, we'll do a 4. This is a 1 to 5 minimum. That's nice. Let's see what happens. All you can do is follow your rules and take the trade. Don't be afraid. We took a loss here. And notice how I talk so confidently, like so confident in that it broke structure in the second time frame. Okay. Because I'm not afraid to lose, embrace losses. This one's gonna go now. It must, it has to, because it shouldn't break the strong low, and the strong low was just made, broke structure, so it should go. All right, so we never broke this high, the major. So that's the new range right there. So after BOS, a new range is created. So let me check the 5. That's an entire order block right there. This is all in OB. Following order flow for 15-minute. 15-minute imbalance for price action. Just draw a line on this. Yep. Okay, so we just broke structure. Yes, this is just gonna go now. So my last long will be here. Because we have that imbalance right there. Liquidity is just above. So I'm gonna just take this long from here. Remember, after a BOS, a new range is created. Like these right here, I was expecting price to come into this POI, but that didn't happen. So see what happens on this one. Perfect. Perfection. Phenomenal. Gotta be confident, guys. You gotta have to be confident. Okay. You have to believe in your strategy. You have to believe in yourself. Okay. You have to. Now, I didn't take anything here because I didn't see it in time, and I don't want to just be taking trades that already happened. I want it not to happen because I don't like taking trades that already happened. So these just played out nice. And yeah, you could have taken a long here, right there. That would have been done a long, strong low, and kept on stacking trades to the upside to hit the overall target. That's the range cycle, right? So this one, it near missed it. So let's see why it near missed it. What did I miss? It's a 15-minute imbalance. The liquidity was here. That's the inducement. The closest thing was. Oh, okay, I see it. It was this right here. It was a 5-minute imbalance full price action. All right, cool. Yep. Perfection. Nice. Nice, nice. Again, another session done. Right. Just real back testing, raw data. Not trying to be perfect or nothing here. I took a loss right here. I missed this trade, but I found out why I missed it. I didn't take these trades, but I took this one. And this one happened, or this one I took before it happened. So great. Yeah. So a total of 11 on this. I wouldn't have taken these personally, but if we did, that's 3, that's 6R. This one was 5, so 6R, so 11. Yeah, so a nice around 15R for the day. And New York is barely starting right there. So not bad at all. Let's go to the 15-minute. And this is how it looks. Okay. Well, that's it for now, guys. I hope it made sense. On to the next one.